Let's take a look at exercise 12-3A. This will help you with your homework on Monday, which you'll do 12-3B. So in this case, I've got a company here and I've got two sets of balance sheet figures for them. I'll draw a line here so I know that the first three are current assets, the second three are current liabilities, and I see what it is at the end of year 2 and what it is at the end of year 1. So this is the beginning of the year and this is the end of the year. So I'll look at each of these and I'll make notes in a minute here about which ones went up and which ones went down. So we see what the impact on cash flow is. And then it gives me some more information to do the operating activity section of the statement of cash flow. So it tells me they have a reported net income. The income statement reported $1,500 gain on the sale of equipment, an $800 loss on the sale of land, $3,600 of depreciation expense, and all of that resulted in their net income of $47,300. So that figure reflects these other items that are shown there. So the first thing I'm going to do is look at the differences between those two figures. So for example, accounts receivable. It went from $37,200 down to $36,000. So in that case, I'll say that accounts receivable went down by $1,200, and I want you to remember this: increase, decrease, current asset, current liability. And if we have an increase in a current asset, it's going to have a negative impact. If we have a decrease, it's a positive impact. So opposite of each other there. And then I flip those around here. So if I have an increase in current liability, that's a positive effect on cash flow, and if I have a decrease, that's a negative effect. Okay, so I would draw that little matrix that you have in your lecture notes there. So in the case of accounts receivable, it decreased, which is a positive impact. So I've got an upward arrow there. The next one we look at, prepaid rent, that increased $600, so that has a negative impact on cash. Interest receivable increased $200, that has a negative impact. Now we're going to flip over and look at the current liabilities. So accounts payable went down $1,100, that's a negative impact on cash. We paid this year's bills plus some of last year's. Salaries payable, that went down $700, that's also a positive impact on cash flow. And unearned revenue went down $1,800, also a positive impact on cash flow. So now we have the information we need to be able to do the operating section here of this statement of cash flows. So we'll start out with net income, $47,300. We'll add back the depreciation because, again, we didn't have to write a check for that, but it was included as an expense in arriving at $47,300. We'll add the loss on the sale, and we'll subtract the gain on the sale. Okay, that gets me to what relates to my operations. And then I'll record all of the changes in current assets and current liabilities. So I'll have that decrease in accounts receivable. That's a positive number here because it has a positive impact on cash flow. I have the increase in prepaid rent. That's a negative figure because it has a negative impact on cash flow. An increase in interest receivable, that's negative as well. And then I've got my decrease in accounts payable, my decrease in salaries payable, and my decrease in unearned revenue. All of those have negative impacts on cash flow. They had downward arrows in the items I wrote up here. So now I can add all of these figures together, and I get cash flow from operations of $47,000. So I hope that makes sense. This is how you would do the first section of the statement of cash flows. That's part of your homework for Monday. As always, call or email if you have any questions. Thank you.